As far as the rupee is concerned, we think that inevitably the rupee would be weakened gradually. And of course, the RBI policy remains paramount in that equation. And what we have seen in the past couple of years is that the RBI's intervention in the FX market has scaled significantly higher to ensure that the exchange rate remains broadly stable, but at the same time, some sense of parity or competitiveness has been maintained, especially vis-a-vis yuan. Now, if you look at the global FX markets, so USD strength, as I pointed out earlier, is a theme that is playing out. And of course, with the kind of policies incoming President Trump has advocated to the detriment of China, yuan could feel the heat, and the Indian rupee would also consequently be weakening. So we have been revising our FX outlook lately, and we think the rupee could weaken to about 86 by the end of the next year. And coming to the the RBI policy, look, we have an inflation print behind us, which was over 6%, and it does not seem likely that the Reserve Bank of India will move at its December meeting. However, we do think that the time for cutting the rate is almost there, in the sense that the underlying inflation is still soft and growth has shown signs of weakening. So if not in December, then perhaps in February that the RBI starts cutting the policy rate.
Gaurav, what does that mean for India's growth run rate long term?
Well, of course, India is being counted as an economy which has shown a significant increase in its potential growth the last couple of years, and for justifiable reasons. What we're experiencing right now is a bit of a cyclical slowdown, as is experienced in any business cycle across any economy. So we have seen some softness in domestic demand come through. What I do want to highlight here is that our forecast, our house view, is that India's growth in FY25, which is the fiscal year ending March 2025, would be about 6.8%, which is about 40 bips below the Reserve Bank of India's 7.2% forecast. What we're trying to say here is that, look, cyclical slowdown may be worse than the central bank expects, but if you look at it from an absolute viewpoint, 6.8% growth is still, a very decent number.